Nigeria's inflation hits 22.79% as food prices rise. Central Bank of Nigeria raises 10-year limit for bank's chief executive to 12 years. Oil slips after Libya resumes output. China data eyed. Asia market fall. China's economy grew 6.3%, missing expectations. And on the program today, issues around the state of emergency declared on food security by President Tinubu shall be our focus. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Well, let's begin by telling you that the National Bureau of Statistics says Nigeria's annual inflation rate rose to 22.79% in June from 22.41% in the previous month. The Statistics Office said the June inflation rate showed an increase of 0.38% points when compared to May 2023 headline inflation rate. The NBA said on a year-on-year basis, the headline inflation rate was 4.19% points higher compared to the rate recorded in June 2022, which was 18.60%. This shows that the headline inflation rate on a year-on-year basis increased in June 2023 when compared to the same month in the preceding year, according to the report. The food inflation rate quickened to 25.25% in June from 24.82% in May. How much is the Naira exchange in for other currencies? Let's find out. Now, before we speak on the issues around the state of emergency declared on food security by President Tinubu, let's listen to this excerpt by a special advisor to President Tinubu on special duties, communications and strategy.
An immediate response to this crisis, a number of initiatives will be deployed in the coming weeks to reverse this inflationary trend and guarantee future uninterrupted supplies of affordable foods to ordinary Nigerians. We will immediately release fertilizers and grains to farmers and households to mitigate the effects of the subsidy removal. 2, there will be an urgent synergy between the Ministry of Agriculture and the Ministry of Water Resources to ensure adequate irrigation of farmlands and to guarantee that food is produced all year round. Government will moderate spikes and dips in food prices. To achieve this, therefore, we have the following stakeholders on board to support the intervention effort of President Tinubu: the National Commodity Exchange, seed companies, National Seed Council and Research Institutes, NIRSAL Microfinance Bank, Food Processing/Agric Processing Associations, private sector holders, and prime anchors, smallholder farmers, crop associations, and fertilizer producers, blenders, and suppliers associations, just to mention a few. There is currently 500,000 hectares of already mapped land that will be used to increase availability of arable land for farming, which will immediately impact food output. Mechanization and land clearing. The government will also collaborate with mechanization companies to clear more forests and make them available for farming.
And now to shed more light on this, I am being joined in the studio by an economist, Yushew Aliu. You are welcome to Business Express.
Thank you. Good afternoon.
Well, Mr. Aliu, I believe you must have seen the latest inflation figures. And it seems like we are moving from 22.79%, I mean, from 22.41% to 22.79%. It shows like, I mean, it seems like the figure shows no sign of slowing down, despite the fact that the Central Bank of Nigeria has been trying to see how they can tighten monetary policy. What's your view on that?
Well, it's much expected, the figure. You know, we have been saying this for a number of days, for a number of months, that inflation will keep on rising so far as there are supply bottlenecks, and also there are certain policies which are not yet adjusted. One fundamental issue about inflation is that at any point in time, when prices continue to persist, and at the same time, people continue to bear the consequences of what their income can take home, there is going to be much pressure in the market. Today, the inflation figure of 20.79 is very high. It's very high because the corresponding income to general public is not changing, and it will continue to increase. Despite the interventions made by government, there are a lot of factors attached to that. When you check, for instance, the foreign exchange unification, which has raised the price or the price of exchange rate to a high level, that also is a factor because the economy is dependent on many variables. Not only that, when you check also the production lines, mostly on agricultural base, is not well harnessed. And not only that one, at the same time also when you check the price stability in the economy based on many factors, you realize that the inflation is not going to drop very soon, and there is need for government also to look carefully at the implication of rising inflation to income of the general people in the economy.
We also have, on the other hand, removal of fuel subsidy. How do you see palliatives maybe being implemented would help the situation?
You see, removal of subsidy in itself is just bringing change in multiplier effect. For instance, the pump price change, the transport cost change, the production cost change, and therefore the price has to change. But when you take the impact of whatever intervention that is coming, the intervention is yet to come, and even if it is coming, it depends on the direction the intervention is applied. Not only that, also you have to also check at the nature of the consumers. So far as people are always trying to get staple food on ground, and they are ready to pay any price because they have to exist by applying prices, then there are indications that is clear that if supply is not checked, supply of whatever there is in the market, that is what is containing most of these issues of changing prices. So far as supply remain constant or supply continue to decline, especially when you speak on foodstuffs that are regularly being demanded by general public, the price will be changing. And
now talking about food, recently the president have made this move to declare a state of emergency on food security. How do you see that covering high prices of food and food security?
The declaration in itself is a bold step to tell Nigerians the situation we are. We have been arguing for so long about the pressure that is obtained in the market as far as the supply of goods is concerned. But when the government itself declares state of emergency, that has brought the attention of everybody. Government must step in, not only to bring certain, to cushion the effect, but to check what are those policies that push Nigeria into the situation of food insecurity. We have said it time with that number that it is not just an economy that there is a responsibility of the economy to produce goods and services, but it is also the responsibility of an economy to monitor the income of the people. That is one. Two, to also checkmate the prices at which consumers are making their activity. So, in my own opinion, yes, of course, there is changes in policy, but there are cogent issues which must be tackled. Supply bottlenecks. This supply bottlenecks has to do with what are those goods that are consumed in the economy. Are they produced up to the capacity of the economy? Nigerian economy has over 216 million people. What is the food requirement for that economy? Is it available? If it is not available, what are the options available to the government to make sure that supply bottleneck is checked? If supply bottleneck is not checked, no matter what policy you bring in, so far as there is shortages in supply, price will be skyrocketing. And if it is skyrocketing, it is going to be eroding the consumer's confidence and the consumer's power in the market. And that will affect the GDP growth rate. You have said in the background, the Chinese recorded 6.3 growth in the GDP. What is the GDP growth in our economy today? And what are the policies that stop us from achieving the target GDP growth rate? These are some of the factors that we must be checking regularly to make sure that the food security that we are speaking is contained. That is one. Two, also we have to check the unemployment rate. The unemployment rate, those who are not employed, that is those who are autonomous consumers, that is consumers who doesn't have an income, but they must consume. What are those avenues at which it can assist them to be part of the economy in consumption pattern?
Okay, I understand that little was mentioned on the policy targets on value. I mean, little was mentioned about value addition. But there's creation of National Commodity Market Board for price assessment and maintenance of strategic food reserve. Is that what we need at this point in time?
This is what we need not in the short run, but in the medium term. Based on the fact that once an emergency is declared, it shows that there is danger ahead for the economy. That is, many people are subject to hunger, many people are subject to malnutrition. So the best way to look at is not the middle range policy measure, but the immediate policy measure. Where are the goods and at what price are they coming in? Government has millions of options to check prices. Intervention is one, regulation is two, and at the same time also intervention in terms of supply is what is more necessary. Let me give you an instance. If you check the production level of rice in Nigeria, which is up to 6.5 million metric tons, but it's not achieved. Only 3 million is achieved. Then what is the economy trying to do with the deficit of that production? And also, what are the challenges that involve the production? Many production in our farmlands, erosion is taking them away. Flooding is taking them away. What are the alternative avenues when that happens? These are some of the immediate measures that I think if we can put them on ground, they will help the price, they will stabilize the price pressure, and they will create moderation.
Okay, there's this issue that just came up. It's somehow now official that the Black Sea grain deal, which allows safe grain export from Ukraine, is somehow suspended by Russia. So how do you see this affecting global food supply?
It's going to be negative because Russia, they are very tactical. They have taken it as a weapon of war to control what goes to the world market and what stops at the war front. And if that is clear, then the nations involved or the community involved must devise a better way to make sure that the wheat which is produced at that zone, that is the Ukrainian zone and the Russian zone, is coming to the world. Because if it is not coming, there is going to be much price pressure, and when you have price pressure, many people will be jumping from irregular consumers to irregular consumers, and when that happens, that will affect the standard of living of the people, the level of the GDP growth of the economy, as well as the global stability as far as peace and development is concerned.
Okay, thank you very much, Yusuf Aliu. Thank you for
thank you very much.
Your thought with us.
Thank you very much.
Okay, let's now take a trip to the commodities market. The price dipped for a second session on Monday after Libya resumed production over the weekend, while China, the world's largest crude importer, is expected to release economic data showing that its post-pandemic recovery is frizzling out. Brent crude futures fell 57 cents to $79.30 a barrel, while U.S. West Texas Intermediate crude was at $74.90 a barrel, down 52 cents. Prices softened after both benchmarks last week notched a third straight week of gains and touched their highest level since April, when output was shut at oil fields in Libya and Shell halted exports of Nigerian crude, tightening supply. Now, for a summary on how Nigerian stocks market fared last week, here is Muplanda Kok with details.
The Nigerian Exchange Limited all-share index depreciated by 0.75% to close at 62,569.73 points, breaking its bullish trend. Market capitalization fell to 34.070 trillion naira. 5.246 billion shares valued at 63.417 billion naira exchange hands by investors on the floor of the exchange in 57,234 deals. All other indices finished lower with the exception of NGX Oil and Gas, NGX Lotus 2 and NGX Industrial Good indices, which appreciated, while the NGX ASEM and NGX Sovereign Bond indices closed flat. The financial services industry measured by volume led the activity chart with 3.494 billion shares valued at 38 billion naira traded in 28,633 deals. It was followed by the conglomerates industry, while the ICT industry was in the third place. Trading in the top three equities, United Bank for Africa, Transnational Corporation, and FBN Holdings, measured by volume, accounted for 1.222 billion shares worth 15.523 billion naira in 8,260 deals. A summary of price changes shows that 29 equities appreciated in price in the week, 77 equities depreciated in price, while 50 equities remained unchanged.
It was a positive start at the close of trading on Monday as the all-share index began trading for the week with 62,943.35 basis point, 710 million shares worth 13.82 billion naira exchange hands in 8,979 deals, while market capitalization ended trading for the day at 34.27 trillion naira. Global market update is next.
Global stocks slipped on Monday after data showed the Chinese economy is growing a lot more slower than expected, with GDP for the second quarter at 6.3%, lower than economists predicted. In Asia, the Shanghai Composite fell 0.87%, leading losses in the region and closing at 3,209.62. The Shenzhen Composite was also down 0.63%, while Hong Kong markets were closed due to the warning issued for Typhoon Talim, and elsewhere Japan's markets were also closed for Marine Day. Luxury and commodity stocks drove European markets to their first decline in 7 days on concerns about China's sluggish economy. Germany's DAX was down 0.42%, UK's FTSE declined 0.3%, while the French CAC dipped 1.18% to lead losses. US stock futures were little changed Monday ahead of a busy week for corporate earnings. Futures tied to the Dow Jones Industrial Average lost 76 points, while S&P 500 futures slipped 0.14%, and futures connected to the Nasdaq 100 traded 0.03% lower. In Africa, market traded in opposite direction in early deals as weak economic data from China hit risk sentiment. The JSE Africa to 40 in South Africa declined 0.97%, while Tunisia's Ten Index gained 0.19%, and Namibia's overall index rose marginally.
This is where we end this edition of Business Express. We value your feedback, so keep the comments and observations and suggestions coming. Be informed that all previous episodes are available on YouTube or the NTA's channel. Business Express returns on Tuesday by 9:30 a.m. Do have a pleasant day.